Welcome to another episode of Help Nobody Told Me. I'm Jasmine Shapiro with Berkshire Hathaway Home Services Chicago, and I am here with my senior resource team partner, Jordan Kagan, who is the man of silver.
Thank you, Jasmine. We are really lucky today to have a great guest, someone I'm also lucky enough to call a friend. His name is Josh.orlan, and he has a specialty or a profession. It's called a reverse mortgage specialist. And it's been around a long time. I don't think a lot of people know what it is.
Or understand it.
But if they knew what it was 20 years ago, they have a certain perception which might not be the most positive. And like a lot of things in life, it has really progressed. And I think it's a great tool. And that's why I reached out to Josh, because I know he knows his product. And I want to share why it's so important.
Well, thank you very much, Jordan and Jasmine. I'm happy to be here. It's great that you do these podcasts, and I'm really excited to be part of it. And I'm happy to tell people all of the good news about the big world of reverse mortgages and how they can help people.
So how is a reverse mortgage different from a traditional mortgage?
So I always say that the reverse mortgage, you have to think of everything in reverse. What it allows is for people who are at retirement age or near retirement age or past retirement age to monetize the equity they have in their home. So what do I mean by that? Normally, with a mortgage, you make monthly payments, right? You pay the mortgage. With a reverse mortgage, the mortgage pays you. And there are several different ways that it can do that. It can provide a lump sum, it can provide a monthly income, or it can provide a line of credit. And that line of credit grows at the same interest rate as the mortgage. And I'll talk more about that in a little while. That's how you can take the money from your existing home. But what people don't seem to understand is that you can use a reverse mortgage to buy a home. And that's what realtors really need to understand if they want to increase their business. You can use the reverse mortgage to buy a home.
So I have a house, it's paid off. I want to get a second home, but I don't have funds unless I sell my house to buy another home. So are you saying that I can use the equity from my home and get a reverse mortgage for that?
Well, that's one way, but what I'm saying is if a person over the age of 62 wants to sell their home and right size, we don't necessarily call it downsizing,
Yes.
but if they want to right size,
Yeah.
they can buy a new home, and the mortgage is not a regular forward mortgage, it's a reverse mortgage. I'll give you an example. I recently worked with some buyers. They sold their home for $945,000.
Okay.
They bought a new home for $835,000. They used about $400,000 from the proceeds of the sale of their old home. That was the equity that they put into the purchase of the new home. The remaining amount I funded as a reverse mortgage. So in essence, they got an $835,000 home with an investment of $400,000. They'll never have to make a mortgage payment.
So
That's pretty
how does
powerful.
that work then?
How does it work? Just
Yeah.
the way I told you. But now
But there's interest on that,
the
isn't
interest on that mortgage, on that reverse mortgage, will accrue over the time period that they own the home.
it? Okay.
And it is not due and payable until the last borrower has, as we say, left the home. Now, these people are 83 and 84 years old. They're going to leave that home feet first. And then the home is inherited by their heirs, and all we want back is the amount that we've lent plus the interest on it.
Okay.
But here's something great. If they owe more than the home is worth, the deficiency, the difference between what they owe and what it's worth, that deficiency is insured by the FHA. So the family does not have to come up with the deficiency.
Wow.
I know, isn't
I
that
did
great?
That's
not know
amazing.
that. Yeah.
Now, not only that, if the family, let's say again, it's underwater. Let's say they owe, $1,500,000, and the home is worth, $1 million, right? There's a $500,000 difference. First, if the heirs sell it, that $500,000, as I said, is insured by the FHA. If the family wants to keep the home, they have to come up with 95% of the value, not 95% of what is owed. So the home's worth $1 million. They owe $1.5 million. The heirs can buy that home for $950,000.
Wow.
That's great to know.
That's
Is that
incredible.
95%? I think so.
Yeah.
You got it.
That's
950,000.
incredible. I did not know that.
It is just an amazingly great tool.
So why do
Meantime-
more people not know about this?
Well, that's a great question. Why don't more people know about it?
Yeah.
I'm out here talking to person after person, spreading the good word about the reverse mortgage really as a financial planning tool.
So are there not a lot of reverse mortgage brokers out there? Is that why people don't know about it?
There don't need to be a lot of reverse mortgage brokers out there as long as you have me.
That's right. Well, that's exactly it.
So what percentage of mortgage brokers have any real knowledge, expertise, or handle reverse mortgages much?
Really relatively few.
Yeah.
And a significant portion of my business comes from regular mortgage brokers who don't know this product.
They don't.
So do you think it's 1%, 5%, 10%?
Not more than 5%.
So it's sort of like Jasmine, as a senior real estate specialist, you're
Right.
1% of
Right.
of all realtors having that designation as a senior real estate specialist.
Right.
And that's why I think it's so important to have Josh on today.
Oh my gosh.
Because it's the
yes.
same clientele. And Josh's clients that are staying in their home to age in place, even when they say, okay, it's time to leave, feet first, that's the kind of situation where I feel they need even more hand-holding than normal
Right.
to have a specialized real estate agent.
Right. Well, I just want to remark on what you said, because most of the lenders that I work with, if I ask about reverse mortgage, their eyeballs kind of go to the back of their head. Like, they don't know.
Yep.
They really don't know, and they're kind of squirming, and they're like, we don't do it. It's not really a good thing. That's always what I've heard, because they don't understand it.
They don't understand
It's
it.
not that it's not a good thing. They don't do it. They
Right.
don't understand it, and
Right.
they just say no.
And I also don't want to hire, and I've known of this for at least a decade, and I certainly wouldn't want to hire someone that does one of these a month or 4 or 5 of these a year.
Right.
Because it is potentially complicated, very regulated. Were these always this regulated, the
Well, they
reverse
weren't
mortgage?
always this regulated, but we have real regulation. And I think regulation is a very good thing.
Yeah.
It's designed to protect the consumer. Everybody who gets a reverse mortgage must first go through counseling that is, the counseling is written by the Federal Housing Authority, and there are licensed agencies who do the counseling, who provide the counseling. I, as a reverse mortgage lender, am not allowed to impact that process in any way, shape, or form.
Yeah.
They go through that, and if they don't, there's no reverse mortgage. It's simply not possible. So, and then it's governed by the promissory note that the borrower signs. It's a
Yeah.
contract.
Yeah.
But in order for the lender to have that necessary FHA insurance, that note is governed by what the FHA says must be in there and must not be in there.
Right.
So the FHA regulates the contract that the lender signs with the borrower.
Okay. So let's say I have a client and they are older, they want to stay in their home, but now they have to have they decide that rather than going to an assisted living, they want to hire in-home care,
Right.
caregivers.
Right.
But that's very expensive.
Very.
Is this something that they could do a reverse mortgage so that they free up money?
That's an important part of what we do. I recently did a reverse mortgage for a 92-year-old man in Skokie who had lived in that home for over 50 years.
Right.
And taking a 92-year-old and forcing them to leave their home,
Right.
to go into assisted living can be very damaging to their physical and psychological health.
Yes.
I was able to provide a couple of $100,000 to pay the caregiver.
That's incredible.
It was wonderful.
Yes.
Now, people ask me, what's the downside? Well, the kids don't get a paid-for home.
Right.
But my obligation runs to my client.
Right.
And most children of the elderly that I talk to say, look, we just want mom or dad to be safe and secure and well taken care of. We have our
Absolutely.
own homes. We make our own living. We want them to be taken care of.
Right.
Right.
And if they were going to go to an assisted living, they would probably have to sell their home to be able to afford that.
Right.
So either way, the kids are not going to have the proceeds from the home, right?
Very true.
So why not have mom or dad in their end stage of life be comfortable?
Bingo.
Exactly.
So who qualifies for a reverse mortgage, and are there any ages or home ownership requirements? So I just heard you had a 90-year-old. That's unbelievable. It's great.
I had a 97-year-old.
Ooh.
Yeah, a 97.
And I had an 80-year-old family member that moved out of an apartment for the first time to a condo to become a homeowner for the first time at 80.
Mm-hmm.
And as you said, the stress of moving from where they had been for 50 years was the beginning of the end. Had a stroke within the first month and never got to enjoy living in the condo.
Oh, that's a
So I know firsthand how you're saying forcing someone to move and dealing with 50 years of stuff or clutter can be very challenging.
It's disruptive. It's very disruptive. So yes, the minimum age for a reverse mortgage is 62 years of age. There is no maximum. As I just said, I did a reverse mortgage for a 97-year-old.
Right.
I have a proprietary product, our own product that mirrors the reverse mortgage requirements, including the counseling. You can be as young as 55.
Wow.
And that product, I did a $5 million reverse mortgage on a $10 million home
Wow.
for somebody who was 84 years old.
Wow.
Right, right. And so what that enabled him to do was he had money. I mean, this man had
Right.
considerable assets. And he lives off of the equity in his home, and he does not liquidate any of his assets in order to maintain his lifestyle.
Wow.
Right?
Yeah.
All of his assets are intact. He doesn't lose growth. He doesn't create a taxable event. And I handed him a check for $5 million.
Wow.
How about that?
Okay, so for our listeners, because we have all age groups, this is a podcast about transitions in life. And let's face it, it's probably the kids of parents who are listening to podcasts. Hopefully parents too, but when we talk to younger demographic of people, you mentioned that you do financial planning and you bring this up in your financial planning.
Well, I'm not a financial planner.
But you talk about this
Right.
as part of their plan.
Exactly.
So what would you say to them?
Well, I do talk about how it should be part of an overall financial plan. I really believe that.
Okay.
And most of our business comes from the children of the elderly who want to investigate that for their mom or dad. Or
Right.
both. Yeah.
Right.
Sometimes
And it really benefits once mom and dad pass. It does benefit the kids, right?
Well, there's certainly a psychological benefit to be gained by making sure that your mom and dad are well taken care of.
Right.
Right. And as you were saying, Jordan, moving is very disruptive. And we find that most people do best emotionally and psychologically if they can stay in their own home.
Right.
It's not always possible, but if it can be arranged, it seems to be the best outcome for them.
Right.
And the stress is absolutely not just on the parents.
Right. Oh, for sure.
It is just as stressful, if not more so, on the kids that have to coordinate the move, pack up the house, get it ready to be sold with a realtor, deal with the moving company, setting up a new place. And so often if the kids were like a son and daughter-in-law, or, you know, both kids have full-time jobs and kids and travel sports, it's just probably one of the biggest stresses of life of every
Right.
single person involved.
But I think also as far as a benefit to the kids, what you were talking about, the FHA insures it. So let's say mom and dad lived in their house for 50 years and never did anything to upgrade it, to improve it. And the kids might want to do a little bit to sell it, but it might not be the value it should be.
Right.
And it doesn't sell for what the mortgage was. They have that insurance,
They have that
right?
insurance, exactly.
So I think that's a
Exactly.
benefit to them.
That's a really good point, Jasmine. I think that's a really, really good point. Right.
Yeah.
The kids can decide what to do with it. Elder law attorneys that I talk to, estate planning attorneys that I talk to, all tell me the kids really don't want the house,
Right.
right?
Right. They
So
want the proceeds from it.
They
but
want the
don't
proceeds, or they want, you know, if you're gonna leave your kids anything and you have investments, the kids want that. I don't wanna sound crass,
No.
but, you know, first of all, we all know that at some point we're all going to pass away.
Sure.
It's just a sorry fact of life.
Yes.
And planning for that is really, really essential. And, you know, speaking of planning, we really do have a retirement crisis in the United States.
Yes.
Very
And
much
we're
so.
in a very volatile economic time, a lot of uncertainty right now.
Right.
People seek safety. And this is one method of gaining that safety.
Oh, unbelievable.
Are there any risks involved, and how do you help navigate them? And I'm guessing you've had at least one person that was either turned down for a reverse mortgage, or you looked at the facts and you said, I don't recommend it. So I'm guessing
Yes.
that
That happened last week, as a matter of fact. I was speaking with a woman who is old enough to qualify for a reverse mortgage, and you don't have to have a paid-off home in order to get a reverse
Oh,
mortgage.
I didn't know that.
We
Okay.
can pay off the existing loan.
Okay.
And you know, swallow that up and provide proceeds. This woman was telling me that she would either do a reverse mortgage or she would sell her home, and her relatives in Michigan live on like 30 acres, and they were going to carve out a couple of acres for her to build a small home. And I went through the numbers and I said to her, move to Michigan. Financially, it's in your best interest.
Okay.
You're just not going to get enough proceeds to really to make it last.
Okay.
So, you know, do I make any money from that? No, I don't.
No.
But I provide a quality service.
Exactly.
And that's the most important thing. You provide a quality service.
Right.
And then, yeah, I've had people where they've been delinquent on their property taxes, or the home is in such disrepair that we just can't do it. So yeah, I've had them turned down, and I've had scenarios where it just does not, it just doesn't favor the people.
I own a home. I'm 68 years old.
You look great.
Thank you. Any risks involved for me doing a reverse mortgage?
Well, I mean, there's not a lot of facts for me to answer the question, but it's worthwhile to look into it. Are there risks? There really aren't risks, per se. There really aren't risks. At your age, I would definitely want to do that line of credit, because every mortgage has an interest rate, right?
Correct.
We all know that. and the debt accrues at that interest rate. But as I mentioned at the beginning, there is a line of credit component, and that line of credit is growing at the same interest rate as the mortgage compounded monthly. So right now that's at about 6.5%, 7%. So let's say that we have a line of credit for you of $100,000. It's growing right now at 7% a year compounded monthly. Now that will fluctuate with interest rates. So if rates go down, it will grow more slowly. If rates go up, it will grow more quickly.
So are the rates fixed, or are they like an adjustable?
It's an adjustable.
An adjustable.
It's an adjustable
Okay.
in order to have that product.
Okay.
We do have a fixed rate product, but you have to take all the proceeds right away. But at 68 years old, if you had a $100,000, I'm just doing this for somebody else right now. If you have a $100,000 line of credit, let's say, after year one, what is it, 107, 110 or whatever, the next year it just grows exponentially. By the time you're 88 years old and you may need to start withdrawing that money, you're going to have, $500,000-$600,000 available to you.
Beautiful.
So people tell me, I want to wait until I need it. No, you don't wait to plan until you need the plan. You plan as early as possible. So for people who don't have a long-term care insurance policy, and most people don't,
Right.
this is their long-term care insurance policy.
Wow.
Yeah.
Beautiful to know.
So are there fees associated, just
Yes.
like a regular mortgage?
Just like a regular mortgage, there are fees.
Okay.
The biggest portion of the fees are paid to the FHA for the insurance.
Okay.
Right.
Is it more than a regular mortgage, or is
Well,
it
a regular
in line?
mortgage doesn't, I almost said it doesn't have that insurance, but it does. An FHA insured mortgage does. It is, it's a greater percentage. Yeah, so it's more costly for the FHA insurance than if you were to get an FHA insured, forward mortgage.
Okay.
We now call regular mortgages forward mortgages.
So, but like, are there closing costs and all that involved, just like if
Just
you were
like
going to
any
take
other
a regular mortgage?
Right, exactly.
Okay. And are they in line with a regular? Are they more? Are they less?
They're in line.
They're in line.
They're really in line.
And when you say that the adjustable rate compounds, so let's say you take this out when you're 62 and then it compounds and now you die and you're 90, are you paying off what it compounded to?
On the amount that you borrowed, yes. If there's a line of credit, when that last borrower dies, that line of credit disappears. Now, I tell people, look and see how much is available in your line of credit when you're in your 90s. Look and see how much your house is worth. And if there's more available in the line of credit than the house is worth, take the money.
Oh.
Take the money, put it in your bank account, and that gets left to the heirs.
Beautiful.
Wow.
Cha-ching.
Yeah.
How about that?
That's incredible.
And we all know that real estate prices fluctuate. The line of credit only grows. We figure out the amount of money that goes into the line of credit based on today's value of the home, but at closing, it's untethered from the value of the home. So that is increasing every month and every year. But if we suffer like we did in 2008,
Yeah.
where home prices dropped 20%,
Right.
that line of credit is going to continue to grow.
Wow.
And that is a hedge against inflation, and it also allows the borrower to take advantage of any appreciation in their home.
That's incredible. Did you know this? I did
Had
not
an
know
idea,
this.
yeah. And that's why I said I thought this was such an important conversation to have.
Right.
Anything else you would like to add, Josh, that you think would be important? This has been very informative.
Yeah, if someone's interested, what's the first step they should take other than calling you?
Well, that's absolutely the first step they
Yeah.
should take.
And we will have all your contact information in the show notes. So
Great.
if anybody wants to reach out to you to get more personalized information, they definitely should.
Well, every consultation I do is free, and no obligation.
Right, but it's
And-
also personal to what
And
their
it's
needs
personal
are.
to them.
Yeah.
Right. Let's talk. Everything starts with conversation. And the conversation is going to lead to either, yeah, it's a good idea for us, or no, we don't want to do it.
Okay.
And I'm fine with either way.
And sometimes they may leave and say, we need to think about it, and not sure it's right, and then they might call you a year from now and say,
That happens.
you know what, we decided we do want to do it.
That happens all the time.
Right,
You know, where I hear from people 3, 4, 5 years later,
right,
and they say, you know, I need to talk to you again.
right.
I'll leave you with this one last story. A 92-year-old woman in Miami, Florida. I'm licensed in Florida as well, and a couple of other
That's
states.
great to know.
Yeah. 92-year-old woman in Florida had lived in this home for over 60 years. Bought it for maybe $40,000 or $50,000. Now it's worth $860,000. She was in foreclosure and had delinquent property taxes.
Wow.
I paid off the foreclosure, paid off the delinquent property taxes, and she wound up with like $275,000 extra.
Wow.
Wow.
Okay, so
There you go.
run that walk to Josh.
Thank you.
Yeah. Oh my goodness. This has been so informative. I think we need to have you back again because I think we need to, there's only so much you can understand in one conversation, right?
Yeah.
So hopefully you'll be willing to come back another time and dig a little deeper into all of this.
I think I will.
Okay,
If
great.
you'll have me, I'll come.
Oh, of course.
Thank you, Josh.
All right, thank
Yes. So
Thank you for
again,
being a friend, and thank you for being here today
Yeah.
on our podcast episode that we call
Help. Nobody told me. And tune in next week for another great episode. Make sure you follow and like us.